Florida was once the land of endless sunshine and affordable dreams. The kind of place where a young couple could buy a small house, build a life, and still have enough left over to enjoy weekends at the beach. But by 2026, that vision has quietly faded. Starter homes, the modest single-family houses that served as the gateway to homeownership for generations, are disappearing from Florida's landscape, and the reasons reveal a perfect storm reshaping the state's housing market. Land prices have soared across Florida, especially near the coast and growing metro areas like Tampa, Orlando, and Miami. Builders no longer find it profitable to construct smaller, lower-priced homes when they can earn far more from luxury properties or large-scale townhome developments. Even in the state's inland towns, where affordability used to be a given, bidding wars have pushed prices beyond the reach of first-time buyers. Many of the homes that once would have been considered starter houses are now being bought by investors, renovated, and flipped into high-priced vacation rentals or short-term Airbnb properties. At the same time, Florida's population boom has intensified demand. Tens of thousands of new residents move to the state every year, chasing warm weather and lower taxes. This flood of demand outpaces construction, which means even modest homes appreciate quickly, pricing out the very people who need them most. Rising insurance premiums due to hurricane risk and stricter building codes only add to the cost, pushing entry-level buyers further away. The result is that younger Floridians are being squeezed out of the traditional path to homeownership. Many are forced to rent indefinitely, move in with family, or leave the state altogether in search of affordability. This disappearance of starter homes isn't just an economic shift. It's a cultural one, eroding the sense of stability that once defined Florida's middle class. If the trend continues, Florida may become a place where only the wealthy can buy, and where the dream of owning a small home by the beach becomes just that, a dream. The state faces a choice: incentivize affordable housing construction or watch an entire generation be locked out of the housing market for good. Florida has long carried a reputation as the land of palm trees, warm winters, and surprisingly affordable homes. A place where retirees, snowbirds, and young families alike could stake a claim on a piece of paradise without draining their savings. But by 2026, that image is cracking. What were once considered cheap homes in Florida have climbed far beyond the budgets of most average buyers, and the reasons run deeper than simple market cycles. The first major factor is demand. Florida has been one of the fastest-growing states in the U.S., drawing tens of thousands of new residents each year from high-cost states like New York and California. These newcomers often arrive with bigger budgets, willing to pay more for homes than local buyers can afford. That extra competition has sparked bidding wars, sending prices surging even in smaller towns and suburbs that used to be havens of affordability. Then there's the investment boom. Out-of-state investors and large real estate firms have flooded the Florida market, scooping up single-family homes to convert into short-term rentals or vacation properties. This not only reduces the number of houses available to local buyers, but also drives prices up as investors outbid families. Neighborhoods once filled with full-time residents are transforming into seasonal rental zones, eroding the supply of entry-level housing. Construction costs have also spiked. Florida's rapid growth has stretched the construction industry thin, while rising material costs, labor shortages, and stricter building codes designed to withstand hurricanes have made new homes more expensive to build. Developers are focusing on luxury or high-density projects, where profits are higher, leaving fewer low-cost options for first-time buyers. On top of that, property insurance has become a financial shock. After a series of damaging hurricanes and the collapse of several insurance companies, premiums in Florida have soared to some of the highest in the nation. Even if a home's price tag seems manageable, the combined costs of taxes, insurance, and maintenance can push total ownership out of reach for many. All of this means that Florida's so-called cheap homes aren't cheap anymore. What used to be an accessible dream has become a financial challenge, and for many locals, the only way to find affordability is to look farther inland or outside the state entirely. Florida's housing market isn't just changing, it's transforming into something entirely new and the forces behind it are not the people you might expect. For decades, Florida homes were seen as attainable slices of coastal comfort, where a modest paycheck could still buy a small house and a patch of lawn. But by 2026, the buyers flooding the market are reshaping the landscape, and many of them aren't even planning to live there. The biggest shift has come from institutional investors, large companies, hedge funds, and real estate investment trusts, who see Florida as prime territory for long-term profit. They're purchasing homes in bulk, often paying in cash, and outbidding regular families who need mortgages. These investors turn properties into rentals, adding instant revenue streams while locking average buyers out. Once these homes leave the traditional owner-occupied market, they rarely return, shrinking the available supply for everyday people. Short-term rental platforms have also amplified the frenzy. Cities like Orlando, Tampa, and Miami are now dotted with homes purchased purely as Airbnb-style properties. This turns residential neighborhoods into commercial investment zones, where homes are valued not for their livability, but for their potential income. Prices rise as investors compete, and locals who just want a place to live are forced to pay far more or look elsewhere. Foreign buyers are playing a role, too. Florida has long been attractive to international investors because of its relatively low taxes, warm climate, and global accessibility. With the U.S. dollar strong and Florida property seen as a stable asset, wealthy buyers from overseas have been purchasing homes as vacation getaways or safe investments, further inflating prices. The irony is that while Florida's population continues to grow, fewer of its residents can actually afford to buy homes. Rents are rising alongside property values, trapping many people in a cycle where they can't save enough for down payments. The housing market has shifted from a system designed for homeowners to one optimized for investors, and that change is reshaping communities. What was once a path to the middle class has become a battleground between local families and global capital, and unless policies change, Florida may become a place where living is far more expensive than the sunshine makes it seem. For decades, Florida was known as a place where first-time buyers could still get their foot in the door. Modest starter homes but by 2026, the entire concept is slipping away. The starter home, once the foundation of Florida's housing ladder, is becoming almost impossible to find, and the reasons go far beyond simple demand. One of the biggest drivers has been rapid population growth. Florida's warm weather and business-friendly policies continue to attract thousands of new residents every month. But housing construction hasn't kept pace. Developers prefer building luxury homes and upscale apartments because the profit margins are higher. Starter homes, with their lower price points, don't offer the same returns, so they've quietly stopped being part of most new developments. This has left an enormous gap at the bottom of the market. Meanwhile, existing lower-priced homes are being snapped up by investors. Many are turned into rental properties, which effectively removes them from the buying pool permanently. As investors outbid regular buyers, prices on even the smallest houses have surged, turning what used to be entry-level housing into something only middle or upper-income buyers can afford. The families who once depended on these starter homes are now stuck renting, watching ownership drift further out of reach. Local wages haven't kept up either. While home prices have soared, incomes have remained relatively flat, especially in the service and tourism industries that dominate much of Florida's economy. This growing gap has created a situation where even people with stable jobs can't qualify for the homes that used to be considered affordable. The disappearance of starter homes doesn't just impact individuals, it reshapes entire communities. Without an influx of younger buyers, neighborhoods age, schools lose enrollment, and local businesses struggle. The promise of upward mobility erodes. Florida's housing market has become a system that rewards wealth and punishes those just starting out. Without targeted policy changes or incentives to build affordable homes, the state risks losing the very people who once gave its communities life. What used to be a stepping stone is now a wall, and for many Floridians, that wall is growing taller by the year. Florida has always attracted wealth, retirees, investors, vacation home buyers. But in 2026, the scale has shifted dramatically. The housing market isn't just welcoming wealthy buyers anymore. It's actively designed for them. What used to be a diverse market with room for middle-class families has transformed into a playground for the rich, leaving everyone else fighting over scraps. Luxury development has exploded. Across Florida, from Miami's coastline to Orlando's suburbs, new construction is overwhelmingly high-end. Developers chase profit, and luxury homes provide massive returns. Waterfront mansions, gated communities, and resort-style condos dominate new projects. Starter homes and mid-range houses, the traditional heart of the housing market, are rarely being built. This shift funnels the entire market upward and locks average buyers out. Investors have only accelerated the problem. Private equity firms, real estate trusts, and wealthy individuals are buying up properties in bulk, treating homes not as places to live, but as financial assets. Many of these homes are left vacant for much of the year, serving as investment vehicles or seasonal residences. Meanwhile, local families can't even get a foot in the door, outbid by cash offers they can't match. This investor-driven model pushes prices higher across the board. As property values rise, so do taxes, insurance costs, and rents. Even people who already own homes are feeling squeezed by soaring carrying costs, while renters are trapped paying record-high monthly rates with no path to ownership. The most dangerous part of this trend is its effect on the social fabric of Florida. When housing is dominated by wealthy outsiders, neighborhoods lose their sense of community. Schools, small businesses, and local services all depend on stable, year-round residents, not transient investors. The wealth-driven housing model hollows out cities, turning once thriving communities into luxury shells. Florida is becoming a place where only the rich can buy, while the working class is forced further away from economic centers or pushed into permanent renting. Unless the market shifts or bold policies intervene, the future of Florida may be one of glittering homes with no one inside them, and a generation of Floridians locked out of the dream of owning one. Florida's housing market was already brutal, but in 2026, a new force is pushing it from difficult to impossible: skyrocketing homeowners insurance. What used to be a minor part of monthly cost has now become a major barrier to owning a home, especially for middle and lower income buyers. Even if someone can afford the mortgage, the insurance bills are breaking them. It all comes down to risk. Florida faces relentless hurricanes, flooding, and increasingly unpredictable weather. In the past few years, storms have caused billions in damages, wiping out homes and bankrupting smaller insurance companies. Those that survived are raising rates dramatically to cover their risk. Premiums that used to be a couple $1,000s a year are now pushing past $10,000 for some properties, and that's if you can even find a company willing to cover you. For lenders, insurance is mandatory. No insurance means no mortgage. That means even buyers who find a relatively affordable home are often blocked from buying it because the insurance cost makes their monthly payment unaffordable. Many deals collapse during the underwriting stage once the true insurance numbers are revealed. The crisis is also pushing current homeowners to the brink. Some are dropping coverage entirely, risking financial ruin just to keep their homes. Others are selling and leaving the state, unwilling to keep paying crushing premiums. As more people flee, supply might rise, but those houses will still be unbuyable if insurance costs remain out of reach. This dynamic has created a vicious loop. Higher insurance costs make homes harder to sell, which makes lenders more cautious, which pushes prices higher for the few who can still qualify. It's not just an affordability problem. It's a systemic threat to the entire Florida housing market. If nothing changes, Florida could end up with thousands of technically affordable homes that no one can finance because the insurance barrier is too high. What used to be a tropical dream is quickly turning into a financial nightmare. And until the insurance crisis is addressed, the promise of home ownership in Florida will remain just that, a promise never delivered. For many Floridians, the dream of owning a home has always started with renting, saving a little each month, building credit, and eventually putting down roots. But by 2026, that path is collapsing. Rents across Florida have exploded to historic highs, And instead of being a stepping stone to ownership, renting has become a financial trap that keeps people stuck in place. The math is brutal. In cities like Miami, Tampa, and Orlando, average rent for modest apartments are now higher than mortgage payments on a starter home used to be just a few years ago. But here's the twist. Renters can't actually move into those homes because they can't save enough for a down payment. Every paycheck disappears into rent, utilities, and soaring living costs. The very act of paying rent is blocking their chance to stop paying it. This pressure isn't just from local demand. Investors are again part of the problem. Many affordable homes have been bought up by corporate landlords who converted them into rentals, reducing the number of starter homes on the market and raising the price on what remains. With so little supply, even rundown properties are being rented for premium rates. Wages haven't followed. Florida's job market still leans heavily on tourism and service industries, which pay far less than what's needed to afford today's housing costs. As rents climb and incomes stagnate, the gap between renting and owning widens into a chasm. Renters aren't just struggling to get ahead. They're slipping backwards, taking on debt just to survive each month. This rent trap has ripple effects. When people can't save or buy homes, they delay starting families, avoid risk, and stop investing in their communities. Neighborhoods become more transient, schools lose stable enrollments, and local businesses lose long-term customers. Florida's housing market now works like a treadmill, fast-moving, exhausting, and impossible to step off. Renters are paying more than ever and getting nothing in return. And unless rents fall or wages surge, an entire generation will remain locked out of the housing market, watching the ownership dream shrink further into the distance.